Let's shift over to sports, where Fanatics CEO Michael Rubin selling his stake in 10% stake rather in Harris Blitzer Sports Entertainment. That's the parent company of the Philadelphia 76ers and the New Jersey Devils. He told Fox Sports in an interview this week. He's doing so to pave the way for Fanatics sports betting operations. Joining us now, Josh Schafer of Yahoo Finance. Josh, give us a breakdown on why he's deciding to make this move now.
Yeah, Brian. So essentially, the top line thing is you can't own a sports team and also operate a sports book, right? I think we can all understand how that would probably be a conflict of interest. Yeah. He can't take bets on the 76ers and own part of the 76ers. So he needed to back out at some point, and we've known Fanatics wants to get into this space. The real reason that I think this is going to be super interesting to watch, Fanatics has basically dominated sports fandom over the last decade. When we look at all the partnerships they've built up, they have that giant email listserv now. If you've ever ordered something off Fanatics, which is mainly a merchandise company, right? If you order a Syracuse shirt off Fanatics, they know that you're probably a Syracuse grad and you're probably a Syracuse fan. Well, now if they operate a sports betting book, they can send you a targeted email that there's a promo on Jim Boeheim over-under wins in his career, or Syracuse to beat Duke, right? Then all of a sudden they have this big database that they can use to operate that these other sports betting companies have sort of been working up to build. Now, of course, what Fanatics doesn't have that the other sports betting companies already have is an operational sports book.
Right.
And that's a
hard thing to start up.
It's a big spend. I was looking at sort of what other people have said about what it's going to cost DraftKings to, say, open up in California. Jeffries pinned that at about $675 million when California opens up. The spend it's going to take when we talk about the marketing and the promos.
It's pretty penny.
That's something that Fanatics is going to have to now worry about and start to spend. It's a company that's valued at $27 billion, so I think they have a fair amount of money. But one thing we were sort of talking about off air, and I was curious about, what about the M&A opportunity here? It's interesting that they're
just go on buy.
It's interesting that they're going straight sportsbook. They want to build their own, right? DraftKings, with how far these stocks have gone down, they're a market cap of $5 billion now.
Interesting. Well, of course, it's a lowering tide across the board, so everyone's valuation is going down. But I guess I'm wondering, is this going to be a good sale in terms of profit for Michael? Because you've seen a lot of other sports team sales as well. Not, necessarily just 10% stake, but Denver Broncos, Nashville Predators as well. Is there actually price appreciation in the value of the teams right now, or is he selling into a falling market?
Oh, there's definitely price appreciation in the value of the teams. I want to say they paid about $320 million for the Sixers back about 10 years ago. That's $1 billion franchise now. And I don't know, we don't have details on exactly what he sold for and who he sold to, right? Because that's the other question, is who's buying that part of the stake. But definitely he made some money off that deal, and now he's betting on it with sports betting, and that's a popular bet right now. I don't know if he'll make profit off that, though. That's the question, right?
Good luck to whoever ends up taking on the stake dealing with James Harden and also Joel Embiid. But Yahoo Finance's Josh Schafer, thanks so much.